About 2.5% of my listeners are under 22 years of age. I started off with the objective of trying to reach out to young people, and I've been singularly unsuccessful in achieving that objective, but I've been incredibly successful at reaching professional investors.
Today's guest is Stephen Clapham, founder of Behind the Balance Sheet and host of a top 1% finance podcast. Stephen trains professional analysts and fund managers to improve their financial analysis through in-person programs and an online school.
Why do you feel prepping that much is important for your podcast?
Well, you mean people just rock up and start a conversation without knowing anything about the guest? First of all, it'd be very disrespectful to do that. The chief strategist of Goldman Sachs, he's giving up his valuable time to come on my podcast just to show him the respect of reading his book. It's a professional courtesy. But second of all, if I've read his books, I have a much more informed conversation. And that's why my podcasts are popular, because I do the work.
So it's like, I want the audience to get as good content as possible, and I feel I'm only able to provide that by prepping a lot.
The podcast isn't really a commercial affair, but I think it should be. You know, I've got thousands of people love listening to it. Why shouldn't I profit from that?
Okay, there is so many things to unpack here. So let's start with, can you tell me about Behind the Balance Sheets, please?
Behind the Balance Sheets, an investment research and training consultancy, which I set up in 2018. I'm a former partner, head of research at two multi-billion-dollar hedge funds. And I got too old to be a hedge fund analyst and set up a training business instead, trying to help younger people and indeed, you know, some experienced people navigate the vicissitudes of the stock markets and particularly of financial analysis.
And you made a podcast out of it as well, right? What can you tell me about the show?
I started off the business coaching people, and then somebody asked me to build a training course. And, you know, it hadn't been my intention at the start to do this, but I built a training course for them, and that was actually quite fun. So I spent the last few years developing that training course. We do a forensic accounting course for professional investors, and teaching them how to be better at analyzing financial information. I then started to get more and more people I was interacting with, and loads of people said, "Oh, why don't you do a podcast?" And at first I resisted, but I've been doing, when I set up the business, I decided to set myself a few new challenges. So in 2020, I wrote a book. 2021, I did a YouTube channel. Late 2021, I started the podcast. I started off, I thought, well, I'll just do 5. And I found 5 people that were willing to be interviewed. And it was really just an experiment. I then found actually it was very enjoyable. So I enjoyed talking to people. I decided to carry on. And so I just do one a month, basically, occasionally do an extra one. My objective at the start was to say, look, being a financial analyst has been a tremendously rewarding and fulfilling job for me. And I wanted to inspire young people to get them to do it. It turns out that most of my listeners are professional investors. I don't know why. And in fact, I was looking at the demographics, and about 2.5% of my listeners under 22 years of age. So, you know, trying to reach out to young people.
Yeah.
And I've been singularly unsuccessful in achieving that objective, but I've been incredibly successful at reaching professional investors. And I suspect that my podcast has got the highest proportion of professional investors listening to it of any of the investing genre. And there's a lot of investing podcasts.
Okay, there is so many things to unpack here. So let's start with the latest thing you said. What do you think when you started creating content for what you thought were going to be young people who wanted to learn about, investing and analyzing stocks, and you ended up reaching a professional audience instead? How do you explain that?
I didn't have any sort of method of reaching young people other than, I used to sponsor a few finance societies at universities. I would find it was too much work and, they weren't very organized. So I just took a lot of faffing around. I couldn't be bothered doing it. if any young people in a finance society and university would like my sponsorship, please reach out to me. I'm very happy to do it as long as you don't require me to do loads of paperwork. I didn't have any, marketing plan. I just did this and I assumed that young people would think this was very helpful. I don't think it's that young people will find it unhelpful. I think I haven't done as good a job probably as I should have of marketing the podcast. And it's become very popular amongst professional investors simply through word of mouth because people, tell that they listen to it, oh, that was really interesting. I must tell my friends. And the reason that they found it so interesting is, I think, twofold. One, I've been able to get guests other people haven't been able to get, partly because I've, been in the industry for a long time and I've got contacts, and partly because people have seen who've been on and they feel encouraged to join. The second reason is that I have a proper conversation because, obviously I was a professional investor, and when we start discussing the methodologies that professional investors use to structure a portfolio or to find stocks or to analyze balance sheets, I've done all that. So we can have I wouldn't put myself on the level of some of my amazing guests, but, I understand why they're doing what they're doing, why they're saying what they're saying. So we have an intelligent and informed conversation. And the professional investors that listen in can learn something. That's quite difficult. You don't get that on that many podcasts because most of the people that do podcasts aren't professional investors.
Mm-hmm. So I love this. And this probably indeed explains the fact that, because I was looking at a couple of your episodes, and so it is understandable, but it's also advanced, right? You get very high level people, high quality people who obviously want to speak to their craft and what they do on the day to day. And could it be that only professionals can really get the full value of this because they're like, oh yeah, sure, I know Gary Shannon. He's, one of the UK's better known value investors. Like, I want to listen to him. Whereas if you have somebody starting in value investing or investing periods, they might not know, they might not see how much value there is in there. Is that possible?
Well, I suppose it's possible. I mean, I would think that if you're starting out, you want to learn from people that really know what they're doing. I mean, I could interview beginners that knew nothing. You wouldn't learn very much, right?
Indeed. Much easier to relate, but harder to learn something of value, pun intended.
Well, if you get somebody like Bill Nygren on, who's a legendary value investor based out of Chicago, who's had a very, very good performance over many, many years. Or Anthony Bolton. So I interviewed Anthony Bolton. I did that live at the Library of Mistakes in Edinburgh, which is run by my friend Russell Napier. And so we had a great fun evening with Anthony. Anthony Bolton is one of the greatest investors ever. He did 19.5% compound for 28 years. I mean, that's an extraordinary achievement. And, if you can't learn, and he's also, got incredibly simple and easy to follow principles. So if you can't learn something from that as a beginner, I don't know, who you can learn from. So you're far better off learning from highly successful people, because the fact that they've been highly successful usually means they've thought a great deal about their process and how they did it, because to be that successful, you've got to be in a journey of continuous improvement. And so, most of these people have thought a great deal about when they've made a mistake, why they've made that mistake, and how they could prevent it, from recurring. And that's an incredibly helpful thing to learn from.
There is this quote from my mentor that I'm feeling obliged to mention here, which is who you should learn from, starting from, the least priority to the highest. The least priority is strangers on internet. Second priority is friends and family who haven't done what you're trying to do and who don't understand why you would want to do that. Then you have people who've done what you're trying to do. And then there is people who've done what you're trying to do and who are successful at teaching others on how to get there. And you're targeting exactly those last two people, people who not only have done it, are successful for many, many years, but who have also obviously working those funds taught others how to do it. And that makes a lot of sense to me. Another thing that you mentioned, Steve, that I want to double down on is you resisted at first doing a podcast. You went for books, you went for a YouTube channel, and then you went for podcast. Why that resistance?
Well, very simple. I didn't know how to do it.
Fair enough. So what made you take the leap then?
People kept saying to me, "Oh, you should do a podcast. You should do a podcast." And I thought about it, and then I spoke to my marketing people, and they said, "Oh, for goodness sake, if you're going to do a podcast, make sure you don't produce another brand." So the podcast people were very resistant to the idea of having yet another brand, because my main brand behind the balance sheet, but our online course, the flagship course, is called Analyst Academy. So we've got, and they said, "Oh, don't call the podcast something else because we'll have, another brand to promote." And we the book's called The Smart Money Method. So, we had multiple things. So I thought, okay, well, I better call the podcast Behind the Balance Sheet. And the first thing I did was check, has anybody taken that name? And somebody had taken that name. And I remember I was on the train back from Brighton, and I found this lady, and Juliana Needham, very nice lady who produces podcasts. And I called her up and I said, "You've got a podcast called Behind the Balance Sheet, and I've got a company called Behind the Balance Sheet, and I want to start a podcast, and I want to call it Behind the Balance Sheet. How much would you like for me to buy that name off you?" And we had a negotiation, and we came to a deal, and I said, "You do podcasts. I need some help, because I don't know I wouldn't know how to do it." And she happened to be speaking in London a couple of weeks later, and on her way to her speaking engagement, she came to my office and she explained what she did and how she did it. And I said, "Okay, fine, let's go ahead." And so she did the first 5, and she produced them and edited them, and organized the music, and the disclaimer in my podcast is got a woman's voice. It's her. She read it out and recorded it, and she did a great job. But she had a series that she was doing for a big corporation, and she ran out of time. She said, "Well, I think, why don't you just do it on your own?" And I said, "Well, how am I going to do that?" But it turned out it wasn't as difficult as I'd feared. And in my office, there's a podcast studio, and I've had this great sound engineer, Rose, who's originally did all the editing as well. She's gradually, over time, run out of time, but she's been promoted here. And now she's not only no longer doing the editing, I found another editor, she's no longer doing the recording. So I'm actually moved to a studio down the road in a canal boat, of all things. But it was just, my resistance to it was I understood how to record a YouTube video.
Yeah.
And I wanted to record the videos because I wanted to improve my video technique. So best way of improving technique is practice, right? I didn't have a reason to do the podcast. But once I found out how to do it, it was fairly straightforward. Although I still don't do any of the sound stuff myself. And one of my friends has got a podcast. He does all the mixing and all the recording himself. He doesn't do the editing. I've got another friend who does all the sound and all the editing. I've got a couple of friends that do that. Not what I want to do, not what I plan to do. But my friend who does the recording himself, he recorded with a very famous founder and sold name in the UK. And he forgot to press
Stephen Bartlett.
He forgot to press record. He had to record it second time. The guy was very nice and agreed to do it. But obviously, when you do it the second time, it wouldn't have the freshness.
Indeed. That might be a problem indeed.
So I don't want the responsibility of having to press record. Obviously, when I do it on Zoom, I've got that, but I put a big sticker on my screen.
Remember to press record. Love that. Why only once a month, Steve?
It takes me 2 days to record 1 hour of content effectively.
How come?
Well, you have to prepare.
That's useful indeed.
I don't know if you can see, there's a line of books on this bookshelf,
Yeah.
and that middle shelf is all the books for the podcast. So I've got, they're not all, actually, a couple of the first ones, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 26. I've actually got 29 on the shelf, but 3 are podcasts to come. 26 books I've read, and I've done 47, 50. Actually, done some YouTube podcasts, so maybe 50, 55 podcasts. So,
Preparation
maybe
time.
1 in 3 authors, 1 in 3 podcast guests are authors, and they've written 1 or 2 books. A couple of the books are biographies. So I interviewed Sir Clive Woodward, the manager of the World Championship England rugby team. He's had several biographies written about him. And so before I interviewed him, I thought I better read the biographies. And he's also written a book, or might have written 2 books. He's written 2 books. Sir Bill Browder, written 2 books. Peter Oppenheimer, written 2 books. So, if you read a book, it's a day to read a book, right?
100%.
Roughly. The current episode with Gary Channon, I had a call with him beforehand just to talk about what we were going to talk about. I read his letters, letters to his shareholders. I read he's got a primer on how his firm works. I went to a meeting that he did, his annual general meeting. I went to that. And then post-production, I don't do any of the editing or anything, but, that's all going to be organized. And one of my team generally, organizes the editing, the video editing, the audio editing. But, I write show notes. So on my website, there's a web page, and I write up what I've learned and what the show was about. It takes time to write it. It takes time to process it.
Do you know Lex Friedman? Does that name ring a bell, Steve?
I don't know him. I've listened to his podcast.
Yeah, sure. Do you know the podcast and the person? Not personally, obviously. So I listened to his episode with Volodymyr Zelensky, and then he had
With who? Sorry.
With Volodymyr Zelensky, the president of Ukraine. It's an episode that aired like a few months ago. Really, really interesting. And then he went on Joe Rogan's podcast to talk about it. And there he explained that he's preparing on average about 100 hours per episode, because it's like, I'm never going to be as good of an expert as the guest coming on, but I want to know the topic inside out. So that means, to begin with, reading their books, because usually they are authors as well, indeed, biographies and so on, but then reading as much as possible on the topic. And I have the feeling that you're approaching podcasts a bit the same way. Why is that? Why do you feel prepping that much is important for your podcast?
Well, you mean people just rock up and start a conversation without knowing anything about the guest?
For sure. Some of them do.
A very disrespectful, first of all, it'd be very disrespectful to do that.
Interesting.
So, I mean, Peter Oppenheimer, the chief strategist of Goldman Sachs, he's a very sharp, very well-informed guy, and he's giving up his valuable time to come on my podcast. Well, just to show him the respect of reading his books, professional courtesy, first of all. But second of all,
I like that.
What am I going to ask him? If I've read his books and I've gone through and I've taken notes and I've got lots of things to talk about, and so I have a much more informed conversation. And that's why my podcasts are popular, because I do the work.
So, see, that's super interesting, because I would have thought So the answer that I usually get when we come to prepping the episode and so on is like, I want the audience to get as good content as possible, and I feel I'm only able to provide that by prepping a lot. I'm the same, by the way. The more prep, the better. But what you insisted on first was the guests. And I love this because it's like you have a high profile guest, obviously, and it's out of respect, but also to be able to have a, equal to equal almost conversation, maybe not equal to equal, but like a respectful conversation with that guest, like make the most use of their time. That's it. And the best use of their time. I like that. That's pretty good. So what about your greatest challenges, Steve? So obviously getting started, right? Getting around the technical knowledge on how to do a podcast, record a podcast, edit a podcast. Apart from that, because you've published close to 50 episodes, you mentioned it, so that's at a rhythm of one per year. You started 2021. That's 50 episodes, 4 years doing this. What has been your greatest challenge in podcasting?
Greatest challenge has been selling the sponsorship and advertising.
So what do you mean by that?
It's not easy to get sponsors. I mean, I was very fortunate. I was backed originally by Sentio, and I asked for a sponsor because I wanted to make it look professional. And also it was expensive. The production was expensive. So I didn't want it to be a massive cost strain because I don't believe in having lost leaders. I mean, every part of my business has to make money. And so the podcast isn't really a commercial affair, but I think it should be. I've got thousands of people love listening to it, and why shouldn't I profit from that? I'm putting 2 days a month into it on average, and my time could be spent on something that's more fruitful financially for me. I mean, I enjoy doing the podcast, so it doesn't have to make money, but it seems stupid not to try and commercialize it. And the most difficult thing for me has been that commercialization. So Sentio, who sponsored me originally, they told me that it was the best marketing dollars that they spent. It was the most hugely rewarding, huge return on investment. And when they were acquired, their new parent company carried on. But we had a short gap in that sponsorship, and I tried to find other sponsors, and I found a couple, but it was hard work. And I don't have a queue of people saying, if they ever stop, we'd love to take it over, which I should do, because extremely difficult to reach thousands of professional investors around the world. And there are lots of companies that sell software or other services to professional investors. They tend to be very expensive products. And how else are they going to reach professional investors? They can take an advert in the Financial Times, the Wall Street Journal. It costs a multiple of what it costs to advertise with me. And you don't get nearly the same effect, because I will only endorse products. I'm endorsing the product
for sure
by taking the sponsorship. I'll only do it if I think it's a good product. And I say I only do that. I mean, I suspect that if somebody paid me enough money, I would take their sponsorship, and I simply wouldn't comment on my use of it. But for example, AlphaSense, I use that product almost every day, and I tell people that I think it will be useful to them. And that imprimatur is obviously got a value, because the people that listen to the podcast, I've earned their trust, and I wouldn't betray that in any way. And so if you're selling a $25,000 a year subscription product, that's very hard to replicate that endorsement, and it will get you a lot of customers. And it's kind of I think it's a no-brainer, but it doesn't seem to be a no-brainer to the people that peddle these products.
How did you find your sponsors? Yeah, like the first one that came to you, if that's the difficulty.
Sentio, I was one of their first 20 customers. I knew them because obviously, when the business starts and it's a startup and you get your first customers, you have a bit of a dialogue with your customers. And so I did, I just said to them, "Oh, I think you should, I'm going to do a podcast. I think you should sponsor it." And I told them who was going to be on it. I just want a sponsor, but make it sound professional. I don't want a huge amount of money. This is what it's going to cost me. Would you underwrite it? And they said, sure. And they found it incredibly valuable.
So that's super interesting. Steve, let's double down on this. Why do you have the feeling that having a sponsor would make it more professional or would make it look more professional?
Because other podcasts I listen to have, the big podcasts all have sponsors. So, by having a sponsor, it makes it sound like you got more listeners. It so happened out the box, I became, my first podcast with no marketing, no advertising, just a couple of things in social media. The word spread like wildfire, and I immediately got into the top. I can't remember 2% of podcasts or 1.5% of podcasts.
Solid.
Straight out of the box, that first podcast got as many views, as many listens as my worst podcast in the last 2 years.
So you mean the first one that was sponsored?
They've all been sponsored.
Okay. And so you explained that success. So now it's top 1%, by the way, as per listen notes behind the balance sheet. You explained this with partially sponsors. I'm just trying to get
the success wasn't down to the sponsorship. If you've got a little backyard podcast that you're doing in your bedroom, then it won't have a sponsor. And if you've got a big podcast, it will have a sponsor. So having a sponsor makes it sound and not, the local tea room, but a global business makes it sound, oh, this is a proper thing. But Sentio didn't know that it would be as successful.
Exactly.
But they knew that the guests were interesting guests. Not that people would necessarily heard of Stuart Roden, who was my second guest, or Quentin Price, who was my fourth guest. They were regarded within the industry, a reasonable amount of credibility. And for Sentio, it wasn't a big financial gamble, It was just something, we may as well try this and see how it works.
I love this.
They hadn't sponsored a podcast before prior to that.
And that's the most impressive, right? Because usually you would have people within marketing departments who know of the traditional TV set and like signs in the streets, whatsoever, depending on the product we're talking about. Obviously, here it's much more B2B.
Maybe 15 podcasts.
Okay. Must be profitable to them then.
Well, I think so.
So it's all down to the business model here, Steve, because the way I would have approached your podcast, right, and this is something the audience knows, is if you have a product yourself, why not building the podcast around, or the other way around, actually, but instead of having a sponsor, just making your own company sponsor the podcast. And instead of funneling people towards Sentio or Alpha Sense, you could funnel people towards Behind the Balance Sheet, which is convenient because it's the same name. So why that choice of saying, hey, this podcast is sponsored by Sentio. Sentio is an investment tool software company, and not, hey, this podcast is sponsored by, and now I forgot the name of your program, which I need to find back. Exactly.
Behind the Balance Sheet, or sponsored by Analysts Academy.
And the Analysts Academy, exactly.
May surprise you, but I'm so bad at marketing that it took me some months to think about putting an advert for my own product in the podcast. But I assumed the people that knew me knew my products. The podcast was creating a new audience for me. I've had somebody get in touch with me and say, oh, what we'd really like is a forensic accounting course, it's where you went through all the tricks in the balance sheet. And I said, oh, where did you hear about me? He said, oh, I heard about the podcast. Did you not hear in the podcast the advert said that we have a forensic accounting course? Oh, no, I always skip the adverts,
It's literally said in the podcast that I'm helping people on this. So did you end up working with that person in the end?
Yeah, we did a course for them.
Nice.
I'm sure the podcast has got, a positive impact on my business. And certainly as I now try and transition the business so that we do more work in the United States, podcast is very helpful for that.
Steve, what about ETFs? I'm all about ETFs, and now I'd like to pick your brain around value investing versus ETFs. What's your take on index funds?
I mean, I don't think there's anything wrong with index funds. I mean, if you want to participate in the stock market, you don't want to go to the trouble of picking stocks, then an ETF is fine. The fact has been that the S&P 500 has gone up an extraordinary amount in the last 15 years, almost mathematically impossible for it to do the same in the next 15 years. I mean, it's not impossible. I mean, the stock market could be rated at 50 times earnings in 15 years' time. I mean, that wouldn't necessarily be a tremendous surprise, but people fixate on the recent past, and the recent past has been very successful. When you've had a very successful recent past, you're less likely to have as successful a near future. And if you look back in stock market history, if you were born, if we were having this conversation 100 years ago, we would think that nobody would want to invest in the stock market. It's a terrible place to invest because 80+% of the last 1 year in the last 15 that's been down. The last 40 years has been, an amazing period. The last 20 years has been an amazing period. You've had 3 down periods that have been very, very painful.
Yeah.
We've had the dot-com crash, the global financial crisis, and COVID.
Yeah.
And then you had the 2022 bear market, which is very short and very brief. Indeed, the bear market earlier this year, which was, again, even shorter and even briefer. And if you went back 100 years ago, it'd be quite the reverse. You'd seen, you had the occasional blip up, and most of the time it was bad. It's not a given that stock market will go up, although everybody tells you that, buy the dip. Stock market it's gone up every 20-year period in the recent past, but not financial historian. So the risk with an ETF, the Mag 7 have driven the stock market. S&P 500 is very concentrated. It's never been as concentrated as it is now, with the top 7 stocks being, I can't remember what,
it's crazy.
25, 35% of the index. The index won't go up. And, I can't tell you what the future is for an Nvidia or a Tesla or an Apple. But I can tell you that, Apple is a $3 trillion company whose sales are not growing, whose earnings are on a 30 odd times multiple, which by historical standards is a very high multiple, especially for a company whose revenues aren't growing. And, we've had this China tariff tantrum, and Apple said, oh, we're going to switch all our production to India. Well, I can tell you that switch is going to be a costly switch for them. I mean, I don't know any of the details of it, but it's obvious it costs them more to manufacture, particularly in the near term. It'll cost them more to manufacture in India, having ramped up very, very significantly.
Mm-hmm.
And meantime, 18% of their profits come from China. And if there isn't a resolution of this 90-day pause on the tariffs that is to the satisfaction of the Chinese government, I can tell you that 18% of Apple's profits aren't worth 30 times earnings for sure. And so, ETFs are, a very good thing for people that don't know what they're doing, but they're not a guarantee. It's not guaranteed that you'll get the pleasure and joy and gains that you've had in the last 15 years. And I would think the odds are probably against it. I think you're probably more likely to do well putting your money into a well-run value fund or a group of well-run value funds. I would expect to do better than the stock market over the next 5, 10, 15, 20 years. I don't know what the time scale is. The S&P 500 is valued like a growth stock. It's very concentrated, and it is, as a consequence, much riskier than it has been since Warren Buffett started recommending that as, as an opportunity for people. And I suspect that if he were starting out today, he would be more reticent about that recommendation.
Well, next you need to get Warren Buffett on the show, I guess, Steve. That'd be sweet.
Ask Mr. Buffett if you'll come on the show. I think he's got your
Would you have
aptitude,
him?
and I've got, too much respect to even bother to waste his time asking.
Steve, thank you so much. This was a podcast masterclass. If people want to find out more about you or the balance sheet, behind the balance sheet, where should they go?
You can go to behindthebalancesheet.com, and there you can hit the sign up button on the top right, which gets you my free weekly newsletter. Well, it's a weekly newsletter. It's not free every week. You can see my online courses, which are for private individuals. And you can also find me occasionally on Twitter at Steve Clapham. And I'm on LinkedIn. We post once a week or so on LinkedIn, and there's a company page behind the balance sheet.
Absolutely awesome. We'll put all the links in the description. Stephen, thank you
Thank you
so
so
much for coming on the show.